and here's your Amazon chart in 2000, basically 99 to 2000. You see that same sort of M top pattern. So my fear here is that Bitcoin is telling you the pattern formation, and patterns in history are amazing to predict the future, is that you may be coming into this kind of washout phase where you have to wash out a lot of the kind of the crap coins. Amazon went from $112 down to $6. So if you map that out to Bitcoin, I mean, this is a worst case scenario, but Bitcoin could be headed down sub 10,000 in that scenario. In an investor's mindset, when you talk about 5-10 years down the line, I think Bitcoin is way higher than it currently is. However, I do view it as needing to go through a cycle known as kind of like the .com bust, right? So you have so many cryptocurrencies out there. There's 18,000+ at this point, more every single day. And it's just too many. It's too much junk in the system. Just like in the late 90s, you had all these .coms, which really didn't do anything, but they got crazy valuations because they had that attachment of .com to them, and investors just paid any price for them. So in terms of the shorter term, now let's talk about swing trading. So what I've noticed on Bitcoin is that we are trading within a range here. There's this top line here where you can see perfectly matches these highs. And then you have this bottom white line where you hit it here and hit it here, right? And this line is perfectly parallel. The two white lines are exactly parallel. And so what you've been doing is you've been staying in this range in the near term. Now you have this one yellow line which kind of connects these lows, and I've been trading that line actively as well as this upper line. So when we were up here, I was going short on Bitcoin. When we came right into this low pivot here, I did buy, and I'm currently still long because we are still holding this line. Short-term target is between 42 and 43,000. So that's a very short-term trade. I may be out of that over the next couple of days if we achieve 42 to 43,000. Now, Steve, one of the things I do want to point out, now you might hear me saying, oh, I'm long, but at the same time, that's a very short-term trade. I do want to send a warning sign in the near term or over the next few months, because this bigger pattern is what's known in technical analysis as a bear flag. So you have this big drop from 69,000 down to 33,000. And then basically this choppy sideways consolidation is known in the technical analysis world as bearish consolidation. And the key to remember here is that if you looked at 1,000 of these charts, you would see a majority, probably in the 70 to 80% range, a majority of them break to the downside. At least in terms of the overall midterm view, you have to think Bitcoin has further downside here, even with my short-term quick trade to the long side. One thing, if I could just take a second to discuss this, is that you're 100% right how you have this upsloping kind of channel, and a lot of people are like, oh, look, you're making higher lows, right? And higher highs. All right, but let me show you this. This is gonna be so, kind of a blow your mind moment for a lot of people out there. If you go back to the previous, and I'm going to put my parallel channel. So remember over here when last May and June, we were kind of trending lower, and then we had this big breakup. Well, take a look at this. If we draw a line here and we draw it down here, you basically have a channel that was downsloping. And in this situation, it's the opposite, right? So this one was downsloping and it broke to the upside. This one's upsloping, and in general, these break to the downside. So it's almost like it teases the small investor's mind, where they think, oh, higher lows, higher highs, this is bullish. And then the chart is like, nope, not so fast. We're going to take your money. Over here, people kept on seeing lower lows and lower highs, and they got very bearish. So what does the market do? It goes the opposite way in the scheme of things here. So just keep that in mind, is that sometimes it's counterintuitive like that, where the charts will do the opposite of what you think. In this pattern is bearish, which ultimately should yield further downside. So I would say you stay with what you have now. Some people ask me and they say, well, I'm still holding up some Bitcoin. Should I just sell it at this point and then look to get in at 20,000 or 25 or 30,000? And what I would say is you don't necessarily need to sell at this point because we're already so significantly off the high, but make a game plan and say to yourself, okay, every 5,000 down on Bitcoin, I'm going to dollar cost average and build, right? And this way you're not all going in here or adding to your position at these higher levels, but if you add as you fall, you'll bring your overall average down. So this is really important, and it's going to probably surprise a lot of people. So what I do is I do a risk analysis, and I say to myself, okay, what's the macro pattern? Macro means big. So the big pattern is bearish, right? So in general, it's a matter of time before we go lower. So you don't want to say, okay, well, right at this level, I'm going to put 100% of my portfolio in Bitcoin, hoping for a $2,000 bounce when it could drop $5,000 or $10,000 on me. So literally what I did, and this is in my service, is we bought 4% of our portfolio in Bitcoin right here. We're about up $1,500 per coin at this point, and that's all I did.
What are you looking for when to exit this trade? And what's your strategy going to be if we break this channel?
Basically, this is your next big trend line right down here. So when you're looking in terms of risk reward, you have to say to yourself, okay, well, if this trend line breaks and we break down, how much can I lose? And the answer is about, this is right around just under 37,000 or right around 37. So from my entry, which is just underneath 40,000, it would have been about a $3,000 per coin loss. So that was number one, is kind of figuring that out. And then the next thing I did was I decided to myself, I said, okay, I only have 4%. So it basically gives me maneuverability. And for me, what I told our members is that if it breaks below and it looks like it's gaining momentum, we're going to take a small stop out, somewhere in this vicinity. But the other option, because we only have 4%, and this is the beauty of it, if I had 100% of my portfolio here, I couldn't do this. But the other option is just adding another 4% right here and then looking for that bounce. And that's what I talked to them about. And I said, all right, so listen, I'm going to decide this based on the charts that I'm reading, is whether or not we're just going to cut it and then re-enter here, or do we just hold it and then dollar cost average right here, putting our average right in this middle area. The beauty of again, a small position is that you can buy at the next support, then your average is here. And when you get a big bounce, which you should get considering we have only 1-2 hits here, you could actually get a bounce all the way back to this yellow trend line and then end up making money even if you had to dollar cost average. And again, that's so important. But I do want to just point out that if, let's say, we did buy it down there and dollar cost average, if it did get into this lower range, that's where you have to cut the trade. At that point, you can't risk it because there's nothing below this area. Once you break out of this channel here, you're in dead man's zone, and you could fall $5,000, $6,000, $7,000, $8,000, $9,000 very, very quickly.
So in the next few months, walk us through what you're looking at in terms of a price target.
Okay, so, and again, I don't want to shock anyone. And number one, before I talk about this, I want to be clear that just because I'm saying it doesn't guarantee it's going to happen, right? So I'm basically putting out there some thoughts that I've put together with some chart analysis, and I want people to kind of take it with a grain of salt, but understand it is a possibility. All right, so one of the things that bothers me about the crypto chart is that this pattern is identical to Amazon's, and we all know Amazon. I'm sure we use Amazon. It's the same chart pattern that Amazon had in the 2000 period before the dot-com collapse. And the similarities with the dot-coms, as I mentioned earlier, there's crazy similarities. Number one, the crypto blockchain, people talk about it, it's going to change the world. They use that terminology all the time. It's a revolutionary thing, right? And I agree with that. But they also said that about the dot-coms. And by the way, they were right about dot-com as well, about the internet. But the problem is that you still need these washout periods. And when you have meme coins and these joke coins and they get billion-dollar valuations, that's not healthy. So if you look at this M pattern, what I want to do now is quickly go back and show you guys what Amazon looked like back in 2000. And here's your Amazon chart in 2000, basically 99 to 2000. You see that same sort of M top pattern. So my fear here is that Bitcoin is telling you the pattern formation, and patterns in history are amazing to predict the future, is that you may be coming into this kind of washout phase where you have to wash out a lot of the kind of the crap coins, and you kind of, the best will survive. Now, Amazon was the best, right? It was one of the best. Google, you talk about some of these other ones. And what I love to show people is that, yes, you may get a washout. And by the way, Amazon went from $112 down to $6. So if you map that out to Bitcoin, I mean, this is a worst case scenario, but Bitcoin could be headed down sub 10,000 in that scenario. Now, my target right now is 20,000 or just a little bit less, but just be aware that if it does repeat this kind of formation, then you have a lot of fear and downside to go before you wash out. But the beautiful thing about this is that if we go back, so now this is Amazon in 99, 2000, and I want to zoom out and I want to show you what it looks like if you go to today. This is the bull case long term of why, if you're just going by charts, here is your M top pattern on Amazon back when it collapsed. Now think about if this was a Bitcoin 20 years ago, now, but in 20 years, where is Bitcoin trading at $3,600, $6 to $3,600? So I guess my point is that yes, I'm midterm bearish, this midterm period, let's say the next 6 months or so, give or take. But longer term, I think there's a huge space for Bitcoin to be that digital gold. And I'm insanely bullish, and I'm mocking up in the same chart as the .com era Amazon.
So your price target is a little bit sub 20K?
Yeah, I would say my guess is we'll hit 20K, which is the 2017 high. I understand that has never happened in Bitcoin's history, but at the same time, every bear market, Bitcoin corrects 80 to 85%. So it's going to be interesting because one of those two will be wrong, right? You're either going to have a bear market where you don't go 80, 85%, or you are, and then you're going to take out the 2017 high. So in general, I'm going to start accumulating for the long term when we get around 20 to below 20. And the way I do it is I don't go all in, just like we discussed. I'll probably put 5% of my account, my longer term crypto account, in Bitcoin when it gets below or right around 20. And then probably what I'll do is I'll be very regimented. I'll be very robotic. And every maybe 3,000 or 4,000 down, I'll just do another 5%. 5%, and then slowly accumulate. So if it goes to 5,000, that's fine. I'm just dollar cost averaging at that point, and I'll build that longer term position. Basically, what my account is right now is it's just purely swing trading. I'm not holding Bitcoin or crypto long term. But if Bitcoin does come down and we do see that flush out like Amazon saw, then what I'll do is I'm going to allocate probably as much as 20% additional into a longer term holding account. And in that situation, that would be kind of looked at as kind of tucking it away, buying Bitcoin, whether it's 20 or 10,000, somewhere in that vicinity, Ethereum, choosing kind of a diversified portfolio of the best of breed. And I would absolutely do that. It's just at these points, I'm not comfortable enough in that long-term kind of holding thought process to be putting that type of money at risk.